Hey everybody, this is Halstead and Andrew McMillan with REH CPA. Today we want to talk about cancellation of debt income. If you've ever not been able to pay off a credit card or pay off a bank loan, the credit card company or the bank may have agreed to forgive that debt that you have. And when that occurs, more than likely they have sent you what's called a 1099-C that reports that amount of debt that was forgiven to you. Now, the way that's supposed to work is that you're supposed to report that as income. But there are some situations that you may not have to recognize that as income. I've got Andrew McMillan here with me today. Andrew, can you tell me about those situations in which you might not have to recognize that as income?
Yeah, so like you said, by default, it's going to be taxable income to you. But if you are in bankruptcy, that is one exception to the general rule. So if you're going through a bankruptcy, then if you receive some cancellation of debt income, generally it's not going to be considered taxable income to you. So you get some relief there. Another one that we see a lot is insolvency. If you are insolvent and you receive some cancellation of debt income, a portion of that or all of that could potentially be tax-free.
And by insolvent, the definition being that your liabilities exceed your assets.
Right. So to determine your insolvency, you have to look at on the day before you get that 1099-C, on the day before you get that debt forgiven, written off, you have to determine how much you're insolvent. So you look at all of your assets that you have, jewelry, house, cars, couches, TVs, everything that you own, and then you have to look at all of your liabilities. How much do you owe other people? What is all of your debts? And then if your debts exceed the fair market value of your assets, then however much it exceeds that, that's the amount that you can use to offset that 1099-C income. So there's a calculation there you have to work through to see how much of this you can exclude from your income. But it can really help taxpayers who are in a bit of a tough spot and they receive a 1099-C. The other wrinkle to all of that, though, is like if you are insolvent and you're able to exclude a lot of this from income, it's great, perfect in the year that happens. But you just have to be aware of that in future years, you may actually have a bit of an issue if you sell some of these assets that you've reduced down to the tax attributes.
So there's some complexities to it. If you don't have to pay tax on the income, it's not always as easy as saying I don't have to pay tax on it. You usually have to do what's called, you have to reduce the tax attributes. Mm-hmm. You may have some credits, some NOLs, or some other assets, mm-hmm. and you may have to reduce those tax attributes. And then if you ever have to sell some of those assets, then you'd have to recognize that income at that point. But there's a lot of complexities in that area. So if you have 1099-C income and you want to know if you're able to exclude that from your taxable income, feel free to give us a call and we'll help you with that. Thanks.